Alrighty, guys, welcome back to another session. And today's date is March 9th. It is a Monday, and we took one trade today, and it was this YM long, as you guys can see. I marked everything out because I just finished my screenshots. But basically, all it was a lagging asset logic to the Devil's Mark Wick and the new week opening gap. I took it off at 1.5R as that was the SMT break logic that did happen. And just being of how far, like the main big reason of why I took it off at 1.5 as well was not only because of that, but also because we already traveled 300 points to get it to 1.5, and that's up to the only target, which is a very valid point for us to start getting a reaction from. And how much I needed to in order for me to get to 2R was going to be a little bit drastic of it was a little bit drastic of where I needed to get to, right? So in order for us to get to 2R from this point, I still needed 92 points. So about 100, let's say 100 points for safety things, right? I need 100 points to get it up to 2R, and that just didn't seem right to me to go 100 points past the draw on liquidity, right? If it was like maybe only 50 points, or if it was just like right here, of course we're going to hold it all the way through. But with it 90 something points, 200 points is what I need. I'd much rather take it off at 1.5 and call it a day there and secure my profits for the day, as it is also a Monday, and that helps feed into the week, right? So with that being said, let's go over the trade and from the top down and talk about everything else in between, why we took it on YM and why we played the lagging asset logic and everything like that. So let's turn off executions. Executions off, get some fresh charts in here and dropping in on it. So as always, dropping in on here on the daily time frame. Well, let's drop in on the weekly, so that way we can get like a really easy picture. As you can tell, what do we have here on NQ is we are running into a very relative level. So with us running into this relative level, what am I looking for is an ERL IRL type movement where I'd like to go from range low and then feed back up into the range for our reversal, possibly up to those highs, as that's going to be like a long-term draw. Of course, it's not going to go here like fucking anytime soon, but long-term draw type shit, maybe we can start heading back up to all-time highs, as there's no more reason for us to go lower, right? We are finally bouncing out and manipulating out this range low, so this is a very nice area for us to start heading up higher as that accumulation, manipulation, distribution back up to the upside. With that same low that did get manipulated here on NQ, it did not get manipulated on YM, as there is an SMT there now, and there is also an SMT on ES as well. So NQ, being higher time frame weaker, is going to go setting the SMT. And now if this SMT is going to be considered valid, what do we want to see? We'd want to see the asset setting the SMT, reversing price. Do we get that? Yes, we do. So within this daily candle, we can take notice of that ERL IRL type stature, and I wanted to explode back upwards into the range, and that's where I was trading to, was into the range, right? Back internally. And for the rest of the week right now, my draw on liquidity will be these highs here for NQ, and maybe just going for this internal range right here for YM and seeing how this gap on the daily time frame is going to treat us, if we're going to continue lower to break this SMT down here, or are we going to go and start to make higher moves up to these low resistance that's located to the left of us. With that being said, I'm not going to go and complicate it too much from there. Well, let's just go and look at it. So from this daily time frame, what are we gathering? We're gathering ERL, IRL. We have an SMT here, which is confluences, right? It's just something that we're taking note of. Is not the most important thing. The most important thing is the universal model, right? So the universal model is ERL, IRL. Let's look for the intraday profile. What time frame do we want to look for the intraday profile on? I want to look for it on the 6-hour time frame, right? So I like to look at the 6-hour time frame, not only because of no fucking way. Okay, so I like to look on the 6-hour time frame because it gives you just a very easy, it splits the day into 3 candles, right? So here the first candle is going to be 1800 candle, and this is going to be your what? Your Asia session, right? So then you do have this 0, so that's 12 o'clock to 6 o'clock. This candle here is going to be considered your London session, and then you do have your 6 o'clock to 1400 or 12 o'clock, and this is going to be considered your New York AM session. So with this being said, I would like to look at this to say, okay, so we have an Asia manipulation, London reversal. Cool. So we have a clear daily open low. high profile where we would want to go up to here. Before all of this did happen and this 12 o'clock candle was all the way up here, it did look like this, where the daily candle just didn't have a wick and only NQ went and tapped into this wick. Did I anticipate us to go all the way up to here today? No, not really. Do I want to see us get up to these points within the next week? Yes, this is where I want to see price start to make its way up, and that's where we can obviously go to. As you can tell, everything has a very clean daily open, low, high, close profile. So how do we want to trade this? We want to trade this open, low, high, close, and then go and pretty much just trade up higher, right? So that's the main objective here. Taking a look here, what can I take notice on the 4-hour time frame is that because I'm trading the 10 a.m. candle, right? With this being the 10 a.m. candle now, how else do I want to see is phases and price. So that's your next checkbox, right? Where is it? Clear phases and price. What phases and price do we get to go and validate the lows or highs of days and stuff like that? So we can take notice of this V shape away from us, V shape away from us, expansion met with expansion, the SMT expanding away from it, telling me that this SMT is valid. All assets is expanding away from that SMT, and we can take notice that right now the draw on liquidity is going to be considered this daily's high, which does not have a wick. With that same high, we can take notice that YM or NQ does tap into it, but does NQ, so this sets an SMT here like that and like this, but does NQ expand away from this SMT? No, it doesn't. So because it doesn't expand and it more so consolidates, what does that mean for us? It means that we can go and break the SMT. So with that being said, we can take notice of the 6 a.m. candle being an accumulation candle because it's a inside bar in comparison to all the others. How do we leave an accumulation candle? Is by manipulation. And then now we can go and break the SMT that was put in on NQ, as NQ is just going to be waiting for us to get there. With that being said, I didn't look on the 1 hour. I zoomed into the 30-minute time frame. This is just from top down, right? So from top down, you could take notice from this is your 10 a.m. opening price here. And then we do set the low of the 10 a.m. candle with a 30-minute C2. So with this 30-minute C2 here, as the low of the 30-minute candle, as you can tell, daily profile is open low, expands away, CISDs on the 30-minute time frame, showing me that this is your possible low of day, expansion into an accumulation. So once you get this accumulation like this, consolidation, accumulation, whatever, how do we like to leave an accumulation? Is by manipulation. So this is your manipulation leg, sets with a 30-minute C2. That's the low of the 10 a.m. candle. And we wanted to trade the C3. How do we get on side with this? There obviously isn't a 15-minute swing, so that's why I was looking for a 30-minute at minimal. Once we got that 30-minute swing there, we zoom into the 3-minute time frame. Let's go and mark out the C3 closure. And then now we look for the V-shape reversal to go and qualify that 30-minute swing. So here's your V-shape reversal. Boom. V-shape expansion met with expansion. We did not close over here, but the candle 3 did just go straight expand through it. So once I had that closure over that, I entered on this entry here. My stops went below this OB because I really don't want to see price come back down anymore. I enter like this, and my target was just for that daily opening price. And also my break even was going to be these accumulation highs as my break even point for that. Wait, where is it? Where's my break even thing right there? For that accumulation, manipulation, distribution. During this meantime, what can we take notice of? The asset that's setting the manipulation off of this daily's high, leaving that SMT. It is doing what? It is accumulating. So if the candle that, or the asset that does go and set the manipulation, or that SMT is going to accumulate, what does that mean for the other assets? That we can catch up. As long as the phases and price supports it, then we can trade those longs up to that point. So with that being said, my draw on liquidity was just going to be daily's opening price to break the SMT that is already put into play. And then that's your TP there at 1.5. Well, my entry might have not been, it's like literally a perfect 1.5. My entry was a little bit better or worse than just a perfect fucking closure, right? And with that being said, that's basically how I got on side with it. So going over the checklist now, right? So universal models is ERL, IRL, The also one thing is as well you want to take notice of here is look at the time when if we're going to trade this reversal day with a long wick, because it technically has a very large wick here, right? Very large wick on this daily candle. This is something that I'm taking notice of, is when the reversals do happen early in the day, such as an Asia or London Asia reversal to push us upwards, and it's very early. This is when you can get those nice expansion moves because it has more time in the day to expand in the given direction. So that is something that I like to see out of reversal days and just in reversal candles in general, because the logic for a reversal candle states that if you want to trade a candle 2, how do you want to trade it? You want to trade it if the reversal happens early in the candle, and that applies to the daily time frame as well. So with that being said, does the reversal happen early in the candle? Yes, it happens in London session, so we can spend the rest of the day expanding away from it. And then you just look at that's basically what it is, right? So universal model, ERL, IRL, intraday profile, open, low, high, close, clear phases and price. What is that called? Expansion met with expansion, accumulation, manipulation, distribution. So clear phases in price. And in my entry signature, it wasn't a 15-minute pullback. It was a 30-minute C2. I let the C2 close and I traded the C3. It was an AMD. The drawn liquidity was still available, and we did have a lower time frame V shape. And the steps is just going to be like your sayings, your quotes, so to say. Is confirm the lower high day with gaps, confirm the gaps with swings. In this case, it was a 30-minute. Confirm the swing with the V shape, and then the targets still need to be available. That's just basically your saying. And for another thing as well, for extras, I was playing lagging asset logic. So if I was going to play lagging asset logic, how do I want to play it? Is after the leading takes the drawn liquidity, I must wait for a new fractal to form to allow the phases to pass. The minimal wait time is going to be that new candle opening, so that allows me to let the phase pass, because when you're playing lagging asset, you don't want to play it right after the leading goes and takes it, because when the leading takes it and it gives it that reaction to the downside or whatever, this is when sometimes you can see that lagging asset actually go and rip down lower. Wait for that manipulation and wait for that lagging asset to go into a key level to then set a new fractal, and your job is just to frame that fractal and have it get supported by the phases in price in order for us to get up to those highs, right? So as long as the phases in price supports the weakest asset for us to go and expand to break those SMTs, then you can go and trade it. But if this is like fucking chopping down to the downside, making super deep retracements, and it's not V-shaping and shit like that, that means that what? The weaker asset is just remaining weaker, and that's not something that you want to participate in. So with that being said, that's basically what it fucking is, right? So very simple. And yeah, so I waited for that new fractal, which was the 30-minute C2. But away from that, that was basically the trade. The executions is fucking, you guys can look at the executions here. Okay, where is the executions? Right there, some shit like that, right? And yeah, that's basically it, bro. I mean, fucking, yeah. I don't know what to say from there. It was a pretty simple day, very straightforward, very clear, so to say, right? Accumulation, manipulation, distribution. Yes, there was 2-stage the SMTs and shit. I seen people shorting, and I was like, bro. One learning lesson, I guess you could say, for me was like, just follow my daily profile, follow what is happening. Don't be so caught up with 2-stage, 3-stage SMT all the time, because that's when you can get confused from the actual framework. Like this framework without a 2-stage, 3-stage, 5-stage SMT, it's all the same shit, bro. Like this is a perfect example of something that I talked about or tweeted about on my YouTube of there's people, we're all taught by the same people and we're all doing the same shit. And with that being said, of us all doing the same shit, people was going and trading this because they seen a 2-stage PSP on the 90-minute time frame. I did not see that, and I still got on side with the same trade. It's the exact same thing. We're all trading the exact same way. We just require different things, and it doesn't mean because somebody else is using it that you have to use it, right? So just stick to what works for you. Find what works for you. Find the best things that really stick out and you can be the most consistent with, and apply and have the most repeatable process with, because if you can't repeat the process, then what the fuck are you doing? You know what I mean? But with that being said, that is basically my trades there. And yeah, I'll catch you guys in the next session. Peace.